The S&P 500 and the Nasdaq 100. We're talking about exactly what happened on the day. Now we look at the day. You see some red. You saw some green early on. Now I believe we're down about 0.6% on the Nasdaq, give or take. Yeah, 0.55 and then 0.59% on ES. Dow down a little bit as well. Now the ultimate reaction on today, and the thing that we talked about yesterday that we had to be on guard was Apple, and then could Amazon and that growth that Amazon had with AWS kind of flow into some other names. And we saw a little bit of that, but it kind of didn't overpower the action to the end of the day. Now, this coming week, I'm going to tell you, we got some pretty big news that we need to be watching for. And if you're a bear, I'm going to tell you right now, this news directly impacts the bear thesis, because if this starts to pivot and switch, you will see some massive downside. Okay, so we got to talk about that a little bit. Video's gonna be pretty short, sweet to the point, so let's get to it. Okay, now jumping into this, again, we saw the kind of bear flag that was forming here. And again, I got to be transparent. We saw that bear flag kind of forming out there. Started to break down here at the end of the day. Okay, that's ES in particular. This is the 4-hour time frame. The Nasdaq, okay, kind of same action, right? Kind of that same action. See how it's forming out there. Okay, kind of breaking down the 4-hour time frame. So this is kind of shaky ground that we're on. Now we broke slightly below, made new lows on the day, but kind of held overall there. So when you look at the grand scheme of things, we're not down too much on the day. It was just kind of like you had like a bit of a break up and then it just gave out, right? And I will also say we look here at the volume, because volume is key and volume is important. And you've heard me harp on volume a lot over the past few weeks and months. You got some downside volume here, 100 million volume on SPY. So again, this could possibly turn and kind of snowball into the bear thesis kind of playing out finally. Now again, I am not anti-bear. I just play the trend and play what's given to me. I think for the past 6 months, people have been saying the top is in, we're not going to push up, and we continue to push up. Okay? So I have to be careful not to play what's given to me, or I'll lose money when it comes to trading in this market. Okay. Now, when we look and we zoom out here, let's talk about a few areas in which we're at. Okay, we have to talk a little bit before we go too far into anything else. You broke a little bit below those previous highs you had there. Again, that's kind of been the give and go for this whole pattern here. But there's a little bit of desync in between ES and the Nasdaq. You have ES coming into those previous highs, which we mentioned in yesterday's video, and kind of what we were looking for today, kind of getting a little bit of love and a little bit of a bounce. You know, we look at SPY and you're not quite there yet. So there's a little bit of disconnect, like I said there as well, in the daily gap, kind of at 443 roughly. Go a little bit deeper into Qs, you can also see you're kind of at that range, dipping a little bit down below. Okay. Now, the most important thing here is we go to higher time frames like the weekly. And these aren't good candles. Very strong bearish engulfing forming here on Qs. On SPY, right? Not great candles here. The weekly here on Nasdaq. Also, no buenos, no nachos. ES, not pretty, okay? That's big, just from a technical standpoint. Now, we go into this coming week and the big news I want to talk to you about, but before we do that, to ask you, consider doing two things, liking and subscribing, because it helps out the channel just so much. I also will say the Instagram link is down below. A lot of you guys miss out on a lot of the short form content that we're doing, some trade ideas, things along those lines. Instagram is a great way to get engaged with us and ask us questions if you have those, kind of when we can't really respond here all the time. So I recommend checking us out there. We're also posting a lot of stuff on stories, and we plan to do more live streams there as well in the future. The big thing too, the newsletter every single Sunday. If you're not signed up, this is free game, 100%. The link is down below. You scroll down and look. What did we say for this week on the newsletter? As we head into the following week, the crucial level to observe this week's market response will be to 45.49, that level. Okay? Upward, 45.90, very big level, right? These are the levels you have to hold, right? So how did we react to there? This is free. You had access to all this, 100% free, no pay necessary. Well, let's see. So we pushed up to around 45.90 here in the beginning of the week, get rejected. Push down. We can never hold that level. Pushing down. You get to 45.60. You start pushing down. But you can also see that 45.49 range right about there multiple rejections over and over with the false breakout here pushing down. Okay, so it was all there, so you have that prepared and you knew what we were looking for here throughout the week. And there's more going into this as well. New newsletter will be available on Sunday. We sent out 10 a.m. Central. Okay, so I recommend checking that out. Now, the big news heading into this week, I accidentally just took it down. Whoops, my bad. Really quick, investing.com, economic calendar. This is free if you want to check it out. Next week. Now, I'm going to tell you right now, I've already looked through all this and I got rid of my filter, but really quick. Thursday, next week, big day. Okay, CPI. Okay, core CPI coming out Thursday morning. And then some more jobless claims. Biggest day of the week. Okay, now look, I'm going to tell you why. Okay, so we talked a lot about energy. We talked a lot about the idea of inflation data starting to spike again. Now, into the end of this week, there was a lot of notion from a few Fed members, Bostic being the biggest one, saying that raising rates further doesn't seem necessary. Okay, now that is a dovish, bullish standpoint in my opinion. Okay, I'm going to say that first. However, we're seeing the downside kind of play out. We're seeing volume kick in. So it makes me get a little bit cautious, a little cautious here, right? Now, again, we haven't confirmed the downside yet, but this week in particular, going into CPI, definitely leads me to be a little bit more concerned. Because if my idea of the possibility, the catalyst for inflation to start spiking back up, which in my opinion would be energy, which energy we've covered all week has been spiking and spiking and spiking, this could be a bad week coming up for us. Okay. Now, we've seen energy rising over the past month. Now, the only thing that is good for bulls, if you're bullish here, and I'm still on the fence on being bullish. We haven't made a lower low yet, but we're not looking great. But this is what I'll say. The only thing good for bulls here is that energy is a very big lagger. So it usually takes about a month and a half to 2 months before energy starts affecting data as far as inflation goes. It's not going to affect it immediately. So the barrel drops $20 overnight. You're not going to wake up in 2 days or 2 weeks and gas prices be at lows. You have to get rid of your current stockpile. Okay, you got to get rid of that. Okay, simple. You understand that? So that's what you need to be and having your head on a pivot for, because inflation this week will be very key. If we see inflation data continue to drop, okay, on top of what has been said from the Fed, I anticipate, okay, personally, I anticipate as well with the credit downgrade on the U.S., I think it'll be almost a confirmed pause, and we'll start pricing that in immediately into the economy. So you need to understand this week in particular with CPI is very big. Now, again, I can only say this so much. You're really watching some of these big levels, and you're like at them now. ES, NQ. It's you got to show up to the plate. Okay, we understand that. We understand that. Okay, now biggest names I'm watching stock. Actually, before I go into stock wise, really quick, some of these fundamental viewpoints. VIX, again, you saw that big push up yesterday, then you dropped back down, and then today we dipped. VIX is all over the place right now. Again, where I start getting concerned on VIX when we get above 20 on the very least, 24 really getting bearish. Okay, until then it's like, hit or miss. You got to just play it by ear. But you're still operating at very low levels. If you look historically, you're operating at low levels from 2021 when you're pushing all-time highs. Still, understand where you're at, kind of read the room there. Now, again, we saw some very interesting behavior here on the dollar. Now, I'm going to tell you right now, the dollar, this is big, and you need to be watching. If we look at when we've had a lot of our big pushes, risk on versus risk off in the market, the dollar has been one of the best indicators, and at times a leading indicator. So we started to see a pretty gnarly sell-off this morning on the dollar. Now, I will say, if you look over the past, 14 days, it's been a lot of upside. Okay, so we can recognize that. But again, you start to see a little bit of a sell-off here as you're coming into said resistance. You still have had, and you still are in the descending triangle here on the daily and weekly, pushing down. But again, you had that false breakout, you came back in. So need to be watching, need to be looking at this. If you're looking at any level to be watching as a target, if we do break down, I'm just going to tell you right now, it is the 200 weekly SMA. That's the level you got to be looking to get a test of. But again, we're not there yet. We need to be talking about that later. Now, we need to see if continuation follows into next week. Now, getting an answer to why the dollar started to weaken, I think it's pretty clear. Okay, we started to also, like I said, we started to see them say that there's a high possibility they're done raising rates. not my words, Fed members, right? We go look at the yields, the 2-year. This is good news if you're a bull. You started to see some of these yields drop. And I'm going to tell you right now, don't count your eggs before they hatch. That's farmer talk. Now, if we look, you're seeing the 10-year. You know, we hit highs, but you started dropping. 30-year dropping. But most of all, you're seeing the 2, 5, 10 drop pretty quick as well. That's what you want to watch, okay? So you're seeing those get some weakness, and you're seeing that inversion again start to dip back down. If you look at the last time we dipped back down was back in March, okay? Remember, this is, again, a leading indicator. What does leading indicator mean? It happens typically before the move occurs. So in March, what did we have happen? Remember, everyone talks about the big banking crisis. It was terrible. It was terrible. I'm not going to lie. I wet myself a few times. But if we look, back in that March time, we started to see the topping of yields and the inversion start to drop on around the 9th. You come back to around the 9th, that's when you have that bad news really pushing you down. And then the 13th, 14th, you start to speed back up here on NQ specifically. You know, ES took a little bit longer to get that love, but you did end up getting the love after all. So again, I'm definitely tracking the inversion and the curve here, okay? Because you are dipping back down and it's happening quick. Again, we got to be prepared. We have to have a trade plan. So I'm not just looking for the next week. I'm looking for the next month, 2 months. I'm trying to be prepared for all case scenarios. Okay, so jumping back in as well. That's the big viewpoint here. And this is still energy despite your down day and, you know, redness on the market. Guess what? Energy was still pushing to the upside. You're in resistance now, but you need to be watching this. This is not good news. But this is all based on what's happening out of OPEC, and that still could change. But again, need to be watching what's happening here, in particular with energy. Now, wrapping it up, few names I'm looking at and watching. Now, again, that's disgusting to look at. What I will say, though, here on the Nasdaq, and call me an optimist, call me whatever you want. If you look at the daily, again, I will say it's not the most pretty, and you could be breaking down out of it very soon, right? But it's still a bull flag here on the daily time frame. Love it, hate it. It is what it is. You all said the same thing back here, and then we broke up. You all said the same thing back here, and we broke up. So I'm just saying, you got to keep it on your radar. Now, Apple was kind of a thing of beauty, and I'm not going to lie, I ended up buying some. I had stops. I didn't get out of it, though. I went to the gym middle of the day. I was done looking at this market. I bought some Decembers, and I said, I'll be back later. I got stopped out of my play immediately at open, and I ended up buying more for December, just the 200 flats. And again, you came back down into that kind of previous high and kind of broke down below it. I'm kind of okay having this position. I think it's down like 15%, give or take. But when I look at what's happening here, I want to see a reaction going into next week. This was one of your biggest drops you've had, I think 5% on the day almost, roughly, and I have a gap up here. So I'm just being patient watching this, and I'm aware of my risk. I started my position. I want to add more, but I'm going to have to wait and see if buyers, what they start to do here. I might start selling calls against this position as well to mitigate risk in the grand scheme of things. Also, too, NVIDIA. So NVIDIA, I gave a little education thing here on the Twitter today. It's basically following the Nasdaq perfectly. It's like an identical spitting image of the Nasdaq, except it's more bullish. NVIDIA, you came back into previous highs around 440. You keep bouncing out of this area. You're seeing a lot of whales, in my opinion, position themselves for next month's expiration. I think it's like September 15th. So they're betting heavy on earnings, like the 550s. And I'm not telling you to buy 550s. I'm just saying there's a lot of big money throwing money there. So you're seeing the market kind of still position themselves both ways. And that's, again, why I'm not jumping to any conclusions here. Just giving my honest opinion. So, again, NVIDIA, very interesting name. Definitely watching it. Now, a little bit further, Microsoft. I mentioned this one yesterday. You kind of bounced out of 325 and you went up to like 335 and kind of came back down. I still think you have to watch it at this demand. And these are all just kind of opportunities that I'm looking at if buyers step in. So I need you to understand that. I'm not just buying these blindly. The only play that I have is Tesla for 2025 and Apple for the end of this year. I'm not like buying stuff short term. Okay, and please understand that. So that's what I'm looking at there. I like Microsoft. I like NVIDIA. I like Apple. And I like Tesla just long term, not short term whatsoever. So again, those are my favorite names that I'm looking at. Congratulations if you traded Amazon. Remember we talked about this down to 127.5. You blew up through 140, 143. On Twitter, also commented and posted this so everyone knew. You can go back and see. Not right there. That's Apple. God bless. That was terrifying. If you go into Amazon right here, SR flip, if earnings beat, easy blast through 140. You ended up blasting like 143. So congratulations if you traded it. Played out really good. Update coming for you on Monday and an educational video on the second channel tomorrow. Have a good one, traders.